This reflation trade, you think the narrative's going to subside, don't you?
Yes.
As we move into 2017. Why is that?
I think it's important, Mark, to first take a step back and look at the bigger structural issues, because in the end, you need to look at the structural issues and where we are in the cycle, right? So looking at that from our perspective, the big issues remain around debt and demographics, right? In the end, we had a financial crisis in 2008, which led to more and more debt being piled into sovereigns and ultimately into emerging markets. We went from a debt system where we had debt to GDP in global GDP sense of 210% to 250. So actually, we went into a financial crisis with too much debt, and here we are 8 years later with 40% more. And actually, the issue really is that the debt is now sitting largely in emerging markets, and the clear place there is China, right? We all know the numbers around China. China's debt has increased by $20 trillion since 2008. And importantly, you look at the level of corporate debt relative to income. It's gone from 4 to 8.9 over the last 8 years. I mean, it's an astounding increase in the level of debt. So debt, firstly, is a major issue, right, as we go into the future. Secondly, demographics, right? I mean, if you look at the role demographics have played over the last 50 to 60 years, it's been a huge contribution to growth. If you take the US, for example, the US in the Reagan era, contribution to growth from demographics was 1.6%, right? Over the last 5 years, it's been 0.5, and that's actually ratcheting down to 0.25 over the next 5 years. Even more alarming is China, right? So China, if you take the contribution to growth from China's labor force, the increase in the labor force, it's been obviously staggering. We know the numbers. Over the next 5 years plus, that is going from positive to negative, right? So demographics plus debt really are the huge structural issues, right? And what that really means is we live in a world which is one of low trend growth, right? That in itself, put policymakers aside, is deflationary, right? And that's the world which this time last year was what financial markets were getting.
But it's shifted now, hasn't it?
Absolutely.
The deflationary narrative.
Yes.
And you're suggesting it's shifting to possibly a stagflation environment.
Yes, I mean, the risks have gone up, absolutely. I mean, so just continuing with that,
yeah.
so really what happened from a year ago was the Fed stepped back, got much more dovish, right? Dollar started to kind of come off. That on the top of the China response and more credit into the system created the reflation boom we saw in commodities well before Trump, right? And well before Trump took the White House, we started seeing government bond yields go up on the back of that kind of reflation narrative. So it was kind of, we got out of jail by virtue of the dollar taking its pressure off, right? So here we are 1 year later. And what is it really that is important around Trump, right? Is Trump a game changer? And this is the kind of the debate around stagflation and deflation. Absolutely in the deflation camp. However, now stagflation is most certainly changing that, and that is all around Trump's policies around protectionism, right? Because if you think about that world I just described, right, in the end where we have low trend growth, low levels of productivity associated with demographics and debt, what does protectionism do? I mean, very simply, protectionism ultimately moves the factor of the productive areas back to the US, which are obviously less productive. So the global productivity in itself will decline. So global growth in itself, just virtue of Trump policies, will clearly be under further pressure, right? So now that's a medium to long-term observation. It doesn't change what happens in the next 3 months. But like we saw back in the 30s, I mean, I think a lot of people are spending time dusting off the textbooks, looking at Smoot-Hawley, right, and saying, well, what happened there? Okay, lots of things were going on, but in the end, the change around global trade in 1930 was a big deal around what happened, associated with the global depression. We had global trade by virtue of the depression, but also linked to it, declining significantly by virtue of trade tariffs. Back then, it was 45%. Under Trump administration, I mean, it's unknown, but you could easily see tariffs going up 20 to 30%. If that happens, that has a major impact on what has been a huge globalization.
And your theme, your base case, is secular strangulation.
Yes.
You're calling it.
Yes.
How do we position ourselves? And given everything you've just said, you've just set the narrative, demographics, high debt,
yep.
protectionism.
Yep.
How do we position ourselves? How are you positioning yourself at LGIM to take all that into account? That's the question that our viewers really want to.
I think one must think medium term. and then frame your positioning at the current moment in that medium-term context. I know that's not a direct answer. I'll get to the direct answer. Ultimately, right, if it's stagflation or if it's deflation, what that effectively tells you, right, is that we are going into some form of a global recession, right? If that's the case, then inflated asset prices, which have been inflated by central banks, particularly risky assets, are hugely overvalued, right? So there's a big correction coming of some sort.
Your scenario was stagflation, deflation means that risk assets are overbought. You talked about a correction. Give me figures. What do we do?
What do we do? Well, I mean, so the driver behind it, right, is ultimately this will lead to a stronger dollar, right?
Yeah.
So everything around Trump policy points to a stronger dollar, right? So if you have a tightening, an increase in the dollar, right? You have an increase in yields.
Yeah.
What that leads is a tightening in financial conditions, right? So at some point during 2017, that tightening of financial conditions will have a negative feedback loop on risky assets, right? Now, the timing of that is really tricky, right? Because at the moment, the market narrative, and the market narrative can only be always about one thing, is around good Trump, right? It is around corporate tax cuts and tax reform and deregulation, etc. At some point, it starts to shift towards a higher dollar and protectionism. When that shift happens, right, the impact it has on places like China, for example, are significant.
What do we get into and what do we get out of when that happens?
So in that environment, you most certainly are in short duration treasuries, right?
Yeah.
So you're in 2-year treasuries, you're holding dollars, absolutely holding dollars, and you're very liquid and waiting for the opportunity to buy back risk.
EM assets, what happens?
I mean, this is disastrous for EM assets, right? I mean, in the end, a stronger dollar, given the size of the dollar liquidity, dollar debt that's been created in the last 8 years, we will see a repeat of what we saw in January, February last year, where we start to see panic in EM assets. Because EM assets is clearly the place.
But there's going to be a buying opportunity after this?
Yeah, I mean, at some point, there is always buying opportunities, but you have to wait for the clean out, right?
And how long
have
could
not
it
seen
take?
the clean out. I mean, if you have to wait, well through 6 to 12 months for that to happen. So this year, to me, is preservation of capital, not return on capital.
Yeah. Equities, what sort of sell-off are we talking about?
Well, I mean,
Corrections 10%.
Easily. Oh, I mean,
That's a gloomy scenario.
It is a gloomy scenario, but if you look at where US equities are at the moment, I mean, the CAPE is at 29, it's at a 96th percentile in the environment we're talking about here, right? The VIX is almost at 11. So the risk pricing, given the risk issues we're talking about, you talked about Europe earlier, we haven't really spoken much about China today. They are so significant, right?
Yes.
And given how elevated asset prices are, that repricing must.
Anton, we will have you back again and again and again this year.